Lebo and Neo, they're coming through from organization Nong Wealth. They are founders of Nong Wealth. And here this morning, just coming through to give us a sense of how they're seeing, they're expecting the year 2025. So let's welcome the gentleman, and then we'll go to Refilo as well, who's on the line. Neo, Lebo, good morning. Welcome to the show.
Morning, Katlego, and morning to the listeners. I'm not sure, did you choose the song or is it Leo or Spoo, but it was a great song, Paradise Road. It's going to be a great marathon today.
Oh, man. I don't know. I think you and I are somewhat aligned, or even in spirit, because the other day we played a song and you were like, this song is what we're playing when we're on our way here, or something along those lines. And at that time, the spirit of praise. Yeah. And we were playing that. I don't know, man. I thought of it as like Paradise Road. The artist is Joy, by the way. And thank you very much, guys, for, actually, I guess this is the way of welcoming you into the year 2025, where the show is concerned. It's a long road ahead of us, but I'm happy that we're doing it together. Yeah. Lebo, how are you?
I'm good, thanks. Hope everybody's well, and Happy New Year again to everybody. Since this is our first time for the year.
Yeah, man. Thank you very much. Compliments. I'm hoping that it has been great so far, the year 2025. Say, how has the year been? And I was asking earlier on to say, as the year starts, do you see a lot of people really position themselves to reach out to you guys? Do you see traffic with a lot of people saying that either they would want to rent and want to know where to go, or those that would want to buy property and would want to start, investing in this space as well? Do we see people selling their properties? Do we see people buying properties? What is happening in this space as we go into the year 2025?
Yeah, man. Thanks for the question, Katlego. As we did mention earlier on, we did say that we are acknowledging that there's so much demand, especially if you priced it correctly, because with regards to the properties that we're currently managing, Lebo was saying that you would find out that on his phone, man, there's like 20 missed calls a day, not missed calls, 20 calls a day, whereby it's just inquiries. So it's clear that there is a demand. And if you are out there thinking that, hey, you know what, the market is congested, or I'm scared to go in, you're definitely missing out, because you need to just make sure that you get in at a right spot, man.
Lebo, would this be people that want to buy houses, buy properties, or would this be people that want to rent? Usually the boom would be around students that would want to move into accommodation spaces, or people that would have changed jobs. They're moving into different cities, different points of their lives, and they would want to approach the property space for the year in that particular manner. Where are we picking up all of this traffic?
Okay, so for right now, with the people that we've been exposed to, right, most people are looking into buying properties to rent them out, right? And now the funny part is, I remember when we were talking about this 2 years ago, a lot of people were saying that they need to firstly buy their property where they're going to be living. But now we're seeing more people that are buying their property. They're buying property to rent it out, but they are renting out
themselves.
Yeah. So they don't really buy a property to live in. Yeah. Of which I think personally it's something that I would look into, especially looking at what's going on right now. I mean, there are a lot of people sometimes that are getting opportunities abroad. So now the question is, if now you've bought your house here and now you are transferred to probably Cape Town, or maybe you're supposed to move outside of South Africa, what then happens to your house? Because most of the time with properties that we buy, chances are we're going to be buying the one that is at market value, which ultimately means that if I'm going to resell the property, I'm going to be making a loss. Some people are not comfortable with that, so they'd rather rent it out, and then they're going to be making a loss on a monthly basis. Now, what is more sensible for a lot of people, or what more people are doing, is that I'd rather not buy my property to live in, but I'd buy a property so that I can rent it out to people.
Does it have to do with maybe the economy, where people find themselves? Do you find people maybe downgrading, tweaking their lifestyles because of where they find themselves now? Instead of you losing this bond altogether, you would rather than find someone that helps you, in terms of paying this bond. Is it a matter of people consolidating, finding a way of how then they can still get the best out of this asset without having to lose it? They would rather than start investing in this space and maybe downgrade, move into a smaller apartment, knowing very well that you're still, in terms of security of that asset, that is still intact.
Yes, 100%. I mean, let's look at it from this perspective. If I'm renting out a property and it happens that I cannot deal with this property anymore, all I just have to do is to put in my notice. The worst that could happen is that my deposit is gone. So say, for instance, if I was renting out a property that's worth 8,000, that I have to pay 8,000 on rent on a monthly basis. Now, the worst that could happen is that I lose the 8,000. Now, if I bought a property, it's a bigger commitment, because now if I do, or if I can't pay, if I can't service my bond anymore, they're going to repossess my property. My credit score is going to actually go down. So now the stakes are actually higher if you are buying a property than if you are renting out.
Let's talk about that credit score, because you mentioned it as well in passing, that there's a lot. I think more than anything else, I saw someone as well saying that this is where it all starts.
Yeah.
You can't in any way be able to move. You would find people that have identified properties that would come through to say, listen, Neo, I've seen this property. I love it. The money is here and everything else. Or I want to source out the money. I want to go. And then you find that it really then works against you because you're not in a good financial health. So does this really become that starting point indeed when you want to buy property, that credit score becomes something that is important here? Because I had someone even saying that they would advise the buyer to say, let's stall a bit. We want you to maybe go for 3 months, go and fix your house, go and open an account and then pay it consistently for 3 months, for 5 months, and then at least there's some things that we pick up. There's a little bit of a history in terms of you being a safe person that we can maybe trust you in terms of giving you or going into a deal with you in this particular manner. But others would say, but why should I be getting into debt for me to get another debt? It's just something that is a tricky one to navigate here, because others would say, the moment Kipopa, I cancel all of my debts. I move in that sense, clean slate. But that may actually be something that works against you in the near future. This credit score business, explain it, break it down for us.
Credit score is very important because now we will be charged interest based on the score that we have. And we should always remember something, that no score or no credit is as good as bad credit. Because now I'm not proving to the bank that I've been using these facilities and I've been paying on track. So now, as soon as we start having bad credit score, now that becomes a barrier to entry. Hence now it creates that market for investors whereby a lot of people cannot buy properties because of the bad credit score, and now the option is now to rent out, because that's whereby you can negotiate with the landlord that, hey man, what's working? I've got a bad credit score, but I can't really negotiate with the bank because there's either two things that's going to happen if I've got a bad credit score. Number one, they're going to tell me to put a huge deposit down, and then number two, I'll be charged high on interest for like 20 years or even 30 years. Worst part, it can happen whereby both apply, whereby you have to put a big deposit down and you are charged high. So credit score is everything. Myself and Lebo call it a credit fast, whereby literally that's 6 months we'd just be aligning everything.
Refila, let me bring it in. And I guess these are some of the things that you'd be inundated with when people come through for advice in terms of handling their finances. You hear the gents here saying that it's somewhat of a barrier to entry. If you don't have a good credit score, if things are not the way that they're supposed to go, you can face some of those limitations. In terms of the property space, what are some of the issues that you've picked up that would be areas of concerns, and what is your thinking around how one can navigate this element of their credit score?
Well, it's definitely the important one in conversation right now, credit score. You'd find that I can say a good 3 out of 10 people come to me and looking for advice. And when we work out the numbers, we find that with coming to things like purchasing assets, especially property, this person earns enough to qualify. However, due to the credit score, you might find that it's holding them back. You might find that it's due to credit history. Sometimes a person earns enough, but just pays their bills late, or just keeps them and reserve them for the following month or the month after that. This is a bad habit. People need to stop doing that, because it only hurts you. You are shooting yourself in the foot, because come the day when you are finally feeling ready to go and purchase an asset like property, then the banks don't trust you. They think you won't pay on time. They think you won't pay, you will skip months, and they think they'll just end up having to come back and repossess your property, which is not a good look for your family.
Yeah.
So, yeah, definitely the most important is your credit score. And I like when the pros are saying a credit fast. Doing that is somewhat of a magic trick, because you might not afford this month. You go on a credit fast for 6 months, and at the end of that 6 months, then you afford a property, you afford a favorable interest rate and conditions. So absolutely, this is the main one, the credit score. That's the main one. The rest kind of falls into areas like affordability, or how much the person is earning, as well as how much they are actually paying when it comes to debt. Because remember, there's also a good percentage of people who are under debt review. So with those guys, it's going to take a while for them to come out of that and then be able to afford again, and their credit history to be cleared, so that they can be able to purchase assets like properties.
Yeah, let's talk about this debt review. Let's talk about the favorable credit score, and also this break. You know, this credit, you call it credit break. Credit fast. So let's talk about this credit fast as well, to say that if you then go into this credit fast, and the intention is to track your habit, and we go into your credit history, don't you think that they'll be able to pick it up, that maybe you're doing this for this particular, moment? The reason why you're getting your house in order is because you wanted to buy, or you have an eye on a property. Don't you think that they investigate and they go deeper into saying, but a year or two ago, this is where you were, and when that then come through to work against you, how far does it go? Do I just need 6 months for my credit score to really look better, and all of these things, the history and my behavior, then it's something that won't in any way work against me, because my credit score is at a healthy position. How do we actually approach this one, Refilwe, and how does one get out of this debt review?
Well, look, I think with the number of months it may take your credit score to come back to what is considered safe, what you would be considered as a safe client, you need to get it above 650. Right now, when it comes to the amount of time, how many months it gets you to get it to 615 and above, really would depend on how bad it is right now. It will take different amounts of times for different people, because as different people, you would have different credit histories and credit ratings at the moment. Now, for the guys under debt review, remember, under debt review is like when you take all of the debt you have accumulated in different accounts, you put them under one consolidated basket, and then you try to pay that. Now, if you're taking Skolotosa 1,000, you're mixing it with Skolotosa 11,000, as well as 3,000, this is going to take you longer to pay off that debt, because now you have a higher monthly premium, right? And then you can negotiate with banks when you are under debt reviews. Just not possible. Now, when it comes to the question of wouldn't they look into your history and then say, oh, he just went on a credit fast for 6 months, he's fooling us. I think not, because banks are also a business. They are looking for a good deal. They're looking for a client. Now, when you come, and even if they do so much digging that they realize, oh, you've only just started improving in the last 6 months, they will appreciate the improvement. Everyone loves to see improvement in any area of their life. So if you have improved for the last 6 months, and you can show with paperwork, your salary and your bills that you're paying, that you can maintain the good behavior for as long as you have this new asset, they'll be more than happy. But you might have to go through certain terms that you have to agree on their terms. It might not be exactly your terms because of your credit history.
Yeah, you're compromised. Yeah, basically.
Yeah, you will be compromised, and it might also depend on the kind of market we are in. But I think that the kind of market we're in now, I agree with my brothers there. It's a great market. It's a favorable market, especially when we think of it in terms of the larger economic structure. I think land has been doing so many, dominating a lot of conversations and topics lately. And so for big corporations going into large investments like buying a block of flats for student accommodations and multi-lets, I think that coupled with the fact that we might see another interest rate staying the same or becoming better, I think, or coming to a halt. I think this is also great for people looking to invest in property.
Yeah.
This really gets your profit margins higher, and you can expect to be good for the next couple of years or even a long time when you invest in this type of a market.
So it's a lucrative space that one should actually go into. And just a reminder to our listeners at home that we're in conversation with Oleboheng, Lebo, and Nell. They're here in studio coming through from Nong Wealth, just talking all things property with us this morning. We're talking property investing, but also at the same time protecting your property. If you already have this property, how do you shield it from some of these occurrences, things that may set you back? They're joined by Refilwe Manyama, who's coming through as a senior financial advisor in this space as well, just helping us get the best out of this property space as we go into the year 2025. And you hear Refilwe is right. I mean, the issue of the land is a hot topic right now. A lot of people are talking about dignity and the land. I think it's going to go to that point whereby all of us are going to be asking each other, how many properties do you have? 4, 6, 8, and then 0. And you're like, what? 0? What are you doing, man? So it's getting to that point. So I think, it will be prudent for all of us to start thinking around how do we invest in property? How do we ensure that we have all of these assets? But at the same time, we look out for the areas, issues of land, because this is somewhat of an investment. I mean, it develops, right? You can buy it, get 2,000 this year. I bet you maybe in 20 years it will be something way above 2,000, right? Am I right about this? So it's a lucrative space for one to really think around going into.
Yeah, I would say it totally depends on where you're actually buying the land, right? Because some people are buying lands in the homeland, right? And then what happens is that the chief will say that, okay, this is your land, and you give them the 2,000. But now when you're looking at the appreciation, or if your land will actually appreciate, sometimes it actually doesn't. So I think it also, when buying land, you need to understand that where are you buying it, and looking at development in that area. Is it actually going to develop? Is the government planning to develop that area? Because it doesn't make sense to just buy land because I just want to own land, only to find out that it doesn't actually appreciate. Nobody's willing to rent out the property. There's nothing that I can do on that property.
So it's what research and consideration that would go into this space, which is why we have Nong Wealth. Yeah. You always, you can always reach out and you'll get people that are expertise in this space that can direct you and drive you into not making some of these mistakes that a lot of people have made in the past. And then you find them really bitten, and it costs you, you know what I mean? But I wanted to find out to say, what is the terrible, credit score that you've ever had to deal with? And do you find people also maybe losing their properties in a sense that I would identify a property and then my heart would be into this property? I would even maybe probably say this is my home because I'm linked to it. Maybe I pass it every day and then I'm like, this is my place. You're just connected. You know when the place is yours. Do you get people maybe forfeiting those because they're not in a good credit position? Do you find yourselves maybe advising them to really go about this in this particular way? And what really gets your credit score up? Is it a matter of, even if you are, let's say, it doesn't matter whether I'm paying a debt of 2,000 or 2.8 every month compared to someone that is paying 200 every month. As long as there's consistency there, you may find that really at the same time, this person that is paying 250 every month is in a better position compared to you that is servicing a debt that is higher. How do some of these things work? And when you look at it, does it really depend on how much you are paying and everything else that will have to do with the months that you tend to give people this credit fast?
Yeah, man. Currently, the interest rate is at 11, right? Mm-hmm. It's at 11%. We've seen someone at 16%, right? So now someone can say, oh, no, man, it's just a difference of 5%. But then you need to understand that you're dealing with big numbers. We're talking about 1 million now. Then now that's when you understand that 5% plays a huge role. And again, you can have two identical properties next to each other. For instance, Lebu's being charged 16%, I'm being charged 11%. But now remember, when it comes to rental, because they both 1 bedrooms, we can only charge, let's say, both 8,000. So ultimately, this means that I am getting better when it comes to value for money in terms of cash flow because my interest rate is low. And again, a very dangerous thing is that we need to remember something. Let's say we did buy it at market value at 1 million, right? And then now I was charged 16%. Basically, my repayment is going to be more because there was an interest. So when it comes to selling, I might be facing a challenge because somehow I overpaid because of my bad interest. Now, by the time I want to sell, I'm forced to selling it for 2 million, whereas let's just say that the market doesn't want to buy it for 2 million.
So it's something that you need guidance, really, because I think if you go about it blindly, you may find yourself really in the receiving end here. If you get the sense that I'm getting here is that once you get it right, really you boom. You know where this is concerned, but you would need guidance here and there as you go about this one. I see Thomas is trying to connect from Kempton Park, but like Thomas, you're welcome to really just throw in your questions on 0861 987 000, and let's see how we can really answer them this morning as we are talking all things property in the last stretch of the show. I wanted to look at the inherent risks that are attached to you buying a property, and one would say it's not a smooth sale. You know, there are a lot of these considerations, and one of the areas that I wanted us to zoom into would be I think the lack of transparency that I think would maybe come through from the agent or would come through from the person that is selling the property that would not give you a sense of the history of this property and some of the challenges that it possesses here. We are seeing these weather conditions becoming adverse. There are some of those areas that get flooded. There are a lot of people that would find themselves really frustrated with this property. When you bought it, it was excitement all round, but now it has turned into somewhat of a burden here that you may find yourself wanting to even get rid of. Do you find these issues becoming somewhat of some people's lived experiences, where the adverse weather conditions, where you see people now even opting to push for home insurance because of the fact that it is becoming tricky? But how do you actually go about it when you didn't know that this is a property that is going to give me problems? It's in a low-lying area. When it floods or when it rains, all of everybody's water is coming into my home. How do you actually navigate this one? And have you ever had to deal with such a case, guys? It's no well.
100%. I mean, I want us to look at it from a psychology perspective, right? For both the seller and the agent. Now, when you're looking at a seller wants to sell their property as soon as possible. It gone. They want it gone. So whenever you walk into their house, they probably like, I hope it doesn't see it. Then when you pass that defect, it's like, okay, at least 1 down, 4 to go. So that's their psychology, because they want to sell and they don't want to give you reason not to want to buy that property, right? Then you go to the agent. Agents, especially when they're starting, they can go a year without selling a property. So now, if it's that first property that they're going to be selling, chances are they won't actually disclose what's going on.
They also want to move it. But is it what informed by commission? You want to make commission, or you would want to actually also be somewhere in the good books in terms of the people that are selling and properties moving here? So some of those considerations would come through.
Of course. So now, looking at that, right? As a seller or as a buyer, it is our responsibility to bring in contractors or professionals to come through and do a thorough inspection on the property, right? Now, thorough inspection means a contractor. We need to get a contractor to actually come through and check what's going on the property. Now, if we are saying that the contractor has to come out and check, that means that we're going to be paying the call-out fee, right? But now look at it from this perspective. If I'm paying 700 for someone to come out to check out this property, and then I see that, okay, there's leaks on the property, there's structural damages, there's a couple of things that are wrong on the property, and I'm going to have to spend around 200,000 on the property. And I know this upfront. I can still negotiate on the price. But now if I'm saying that I'm saving the 700 and then I go in and view the property and then don't see these defects, at the end of the day, I'm the one that's going to suffer because now I'm not able to actually negotiate on the price of the property.
You're not a professional as well, right?
Yeah.
You're not.
Yeah.
Even though we've checked out a lot of properties, we still go through with contractors. Yes, we do see some other stuff and you're like, okay, I know what that means. But now we still want to get that person to come through and say that, can you please assist us to check this property? What's wrong with the property? Because I know that once I've purchased the property and then something comes up, and I know that we could have actually detected this, I can put liability on the contractor that why didn't you see this?
Yeah.
Does this come at the expense of someone that is buying this property, or is it something that comes from you guys and then you more or less bill it? Is part of the entire monies that I'm going to be paying to purchase this property? And can one then also, I mean, I've seen it with cars where people are calling their own professionals, there are organizations that also have set themselves up to say that really call us before you buy this car. It may look nice from the outside. You never know what the defects may be and its history and everything else. The DECRA report may not even be there. So for you to really be safe, maybe it may end up costing you a little in the pocket, but it will save you a lot in terms of the challenges or the problems that you can experience in the future. So who pays for these things? Who initiates these things? Can I be the one that say, I'm going to view, and then the agent Asalemo, I'm like, hold up, there's someone at the gate, and then this agent just sees someone walking in and basically saying I'm viewing with a professional. How does one actually approach this one?
Yes, so it's on us, the buyers, right? But also to balance what Lebo was saying off, right? Because we spoke about the seller and also we spoke about the buyer. No, we spoke about the agent. So let's talk about how law has come in, which is the PPA, the Property Practitioner Act, right? Now, we have to sign a disclosure form as sellers about everything that is wrong with that property before the transaction goes through. So now that helps the buyer to kind of say that, okay, I have in black and white whereby you didn't mention. But here's where the trick is, right? Here's where the danger is that it's called the PPA because it's the Property Practitioner Act, right? But now if I'm buying your property as Neo from a side, now you find out that there was no estate agent. Now we can miss this, and I didn't ask for a disclosure form, but now you told me food stoods. Yeah. So that's where we get caught off a lot, especially whereby I'm trying Matala side and not do it the right way.
Isn't it supposed to be somewhat of a standard here, this disclosure form? Is it something that will have to be initiated by the seller? Is it something that the buyer will have to be aware of and requested? Is it something that the middleman, the agent, or you guys would have to come in here to say that this is where what we are initiating here in terms of credible industry standards, operating standards? How should it go?
Before any transaction actually goes through, as an agent, if you are involved, it's a must that you do that. However, now that's why if I'm trying to be the smart guy, be like, let's exclude the estate agent, because you're paying an estate agent around 7% of the whole sale. So if I'm like, no, let's just do it on the side, we're missing out on a whole lot of benefits. So most of the time, it's more of lack of knowledge that I missed it. I didn't know that I should be inquiring that. So next time you're thinking of excluding the estate agent, know all of their responsibilities and know why they do that.
So is it a matter of me maybe seeing a property online, and then instead of seeing that it's listed, and then there's a person that is an agent here, so what, I can go about it, bypass the agent, go directly to the seller and say that I want to talk to you directly. I don't want to go through it via Nong Wealth.
Yes.
I want to go at it with you, and then I start negotiating maybe for lesser prices and everything else along those lines.
But also understand the risk.
The danger.
Yeah.
Refilo, what is your thinking around this one and the issues around disclosures? And do you get a sense that there would be some people that would come to you saying that, listen, I once bitten, twice shy. How do I approach this one? Because I found myself here before where this property, it was a beautiful thing, but it has turned into a nightmare now.
Well, so what the guys are saying, 100%. Remember, if you decide you're going to go on your own to go purchase a property directly from the person that's selling it, not the agent. The person that's selling it is not a property practitioner. They are not in the business of handling and selling properties or providing knowledge about properties. So they are not bound by any contract that forces them to disclose every information. So they cannot be held accountable if they do not close all the defects of the property. It is you as the buyer now who has the responsibility to say, no, I need the disclosure form. You need to disclose every single defect. But if you forget that, or if you don't know you have to do that, then you might be buying a property with defects that is going to be a liability. So, yes, I 100% agree with the guys. Remember, if you want to buy a property and you are thinking of excluding an agent, there's a whole array of things that you don't know about, that this guy has a responsibility to come and disclose them to you and to handle them and to also provide paperwork to show that these things were discussed and what's the word here? To say these things were discussed and also disclosed to both parties, the seller and the buyer. Right. So, absolutely, if you want to buy a property and you want to do it on your own, you best get the real estate agent manual. Know what are the things they are supposed to disclose in the whole transaction and how they are supposed to handle the entire transaction. This way, you might actually not miss the small details that actually become make your property become your liability instead of an asset.
Yeah, no, you need to actually really capacitate yourself as much as you can. And I wanted to ask Jens to say, do you also ask me when I approach you to say that I want to sell my property? Do you ask me as to why? Is this, or you don't, it doesn't matter, as long as here is a person saying that I want to sell my property, you don't actually get to ask, or why are you moving, maybe the history, or how long have you stayed here, and start interrogating some of these issues that will give you a sense of whether this would be a problematic area to be selling this property, or whether this would be a problematic even property to sell because of all of these issues that may be underlying, that someone will pick them up and it won't move. We can even spend a year having this property here. Did you ask me? Do you want full disclosure?
Yeah. No. I need to understand why, because remember, as much as we're pushing sales, but at the end of the day, I might be putting myself now in a family situation whereby that property was not supposed to be sold, or you are not even the rightful owner. So we need to understand why before we even put you on board. And you can lie, but at least I would have done my due diligence in terms of understanding. Can I please, just a quick one, right?
Yes.
We were having a big debate, myself and Levo, and I want him to actually just disclose about it in terms of food stoots versus the non-disclosure form. What we're speaking about right now.
Yeah, Lebo.
Okay, so with regards to Voetstoots, right, we are basically saying that you're buying the property as is, right? And then
With all of its problems, with all of its 110 challenges, defects, and not.
all of its things. So now, when we are talking about the disclosure form, this is us saying that the person is disclosing everything that is wrong on the property, right? Now, a lot of people, what they'll do is that they'll say that, no, the property is sold Voetstoots, and whatever happens, right? But now what they then do is that they can see that there's a leakage, and then they just put in some paint so that you don't see, right? So now that is not Voetstoots, because now you masked the problem.
Yeah, because Voetstoot is as it is, right?
Yes, yeah.
If it's a broken bulb, I must get that broken bulb as is.
Of course.
So if you've tried to fix the bulb, it means you are capable of more or less addressing some of these defects.
Yes. So now with regards to Voetstoots, we are saying that we're buying the property as is. So now if it's in a bad condition, you're buying it with that bad condition. However, if you try to mask it as the seller, if you're trying to mask it, and then the buyer comes 2 months later when it started raining and it's like, yo man, the thing that you plastered here is starting to leak again, then that's when it becomes a problem.
Yeah. So in essence, disclosure form is above Voetstoots. Yeah.
So, but is it accommodated in this PPA? All of these, are they accommodated in the PPA, or the PPA will only apply when this property is not a Voetstoot?
Yes, it is accommodated in the PPA. But now what I also want to mention is that, remember, even when you're looking at, say for instance, if you had a leakage problem, right, you have to disclose that even if you fixed it. Right, because some people will say that no, I don't have to disclose it because it's not a problem
fixed,
right now.
Yeah.
You have to disclose it that we recently fixed the leakage there, because now that could be another problem that might come up. Because sometimes if you're buying, personally, I don't feel like buying a property between May and September is a good idea, because in those months it's not raining. So it's hard for you to check if there's a leakage. And most of the time, the sellers, when you see a damp on the ceiling, the seller would say, no, we fixed it. But now the problem is that, how do we then know?
How do we know? If it has recently rained, we can say no, but it's still wet.
Yes.
So you have not entirely fixed it.
Yes. So buying a property between those months, I'm not saying lose out on a good deal, but I'm also saying that please just beware that if you're buying properties between those months, chances are that you won't be able to see any roof leakages if it's still a problem.
Do you see some properties maybe in certain areas where you're like, that's a no-go? I know very well that, I don't know if you're staying in Centurion, you'd hate me, but the people in Centurion, you'd find them really struggling a lot with their properties, especially when it rains, low-lying areas and the likes. Do you see some of these things being considerations? Do you disclose them? When you walk into a space, an area, do you immediately pick it up by just sussing it out to say, hey, this area seems like one of those areas whereby really it's going to be a little bit of a challenge here? Do you sometimes see a boom in certain areas, maybe around winter, around summer, because people are frustrated? You can tell that this was a snap decision. This person just can't take it anymore. Every year they're dealing with a property that is flooded. So do you find that this would be certain considerations in terms of how people move their properties?
Yeah, it happens a lot because majority of us buy because of emotions, because I've always wanted that house. And now also when we're preparing, the questions that we then need to ask as part of due diligence when it comes to the insurance, does it cover that hazard? Because now insurances do not cover everything. Unfortunately, now we do not take that time to really understand our insurance. We only want that paper when I'm in trouble and I'm like, but why are you guys not helping me? But you find out that's the option that you subscribed to.
Let me bring you in, Refilwe, because this is where, I feel like you would really, really more or less know in terms of the happenings there, the property insurance. And I mentioned it to say, as we see the adverse weather conditions, do you see also a boom in terms of people moving into that space, trying to, claim as much as they can, or others trying to secure themselves because they're dealing with something that is unknown here, this climate change change? And also when you look at it, is it a thing? Do we see people taking property insurance or home insurance in that regard? I mean, one would think about a car insurance, cell phone insurance, but do we see people now more than ever taking it all the way there to say, I need to insure everything that is in this house because of certain of these issues that are uncertain issues that may creep up with me as you go along? What is your thinking around this one, insurance?
Oh, yes. So a lot of people are now, in fact, beginning to take out home insurances. Those that had it right for a while now, it's people that have been in the property market in the property space for some time, but a lot of people are moving towards also getting into home insurance a lot. I think this might be an idea that is reinforced by the recent weather conditions. It's just different nowadays. But also I've noticed something. There's a trend where it seems like the new homeowners don't really understand which benefits they need to be looking for specifically when purchasing a home insurance product. So I would say one must look at the benefits that are relevant to you. Write them down before you pick up a call and you get a quotation from any insurer. Write down the benefits that you need, the things you need covered.
What would those be, Refilwe?
Those would be, for example, your whole house, in case it floods and you lose your roof, or you lose part of your house, a wall maybe, or the doors or something. Natural disasters, or if there's a fire, or if
a break-in or something along those
break-ins and stuff. Now, the specific benefits you should be looking for here is if the damage is caused by rain, will the insurance pay out? Yes or no? They need to be specific. They can't be in between. Yes. They can't say, oh, well, it depends. No. If it's rain, will you pay or not? You're looking for an insurance that if you get damage on your property due to a natural disaster, they'll pay. What type of a natural disaster? We can't say no because it hardly snows yet. Right? We'll go for something that we know is always happening, like hazardous winds, rain, hailstorm, such and such. We look at the things that really we do experience. We can't take things that, like tsunamis, we don't really see them here in South Africa.
Awesome.
Right? So that's what I mean when I say the specific benefit. And also looking at what it is inside the home that should be insured. But outside and inside the house, right, you want to make sure that you have insured everything, because you might have assets in there. You might have things that are helping you run your business, and you might have things that at home they just make you feel more secure because they provide security, like your computers and cameras and drones and whatnot. You need to insure all of these things. Make sure that in specific natural disasters that you constantly experience, then these things will be covered and paid for.
Are these big line items, if I can come in, Refilwe, are these big line items, or I can also insure anything from a pen to a spoon? And does this actually differ in terms of how much I'm going to pay here? The more I add all of these things, is the more then my premium would go up. How do I approach this one? Do I also, have to single out some of these things in terms of, when they were bought and all of these things that will come through, or all of it will differ from one offering to the next?
Well, let me say absolutely it will differ, but you need to insure things that have a rand value that is a lot. You can't insure something that is you can easily purchase if you were to lose it or misplace it somewhere. You need to, hence it would have to do with things in the house that have a rent value, or that if you were to lose them right now, replacing that product would be very difficult or very, very expensive.
Do they cover floods, Refilwe? I'm just looking at the time. When you look at these insurances, do they cover these floods?
Not all of them.
Yeah.
They do, but not all of them.
Yeah.
There's few ones that do. There's also few ones that don't.
Yeah, the gents, let me bring you in. Or what has been your experience?
T's and C's, man. And I think Lebu is the relevant person because it recently happened, bro.
Level.
You know the thing, or the biggest mistake that a lot of people do is that once they started claiming for their insurance will make you run around while they're doing their investigations.
Yeah.
So we tend to say that most these people are not going to pay me. Let me stop.
Yeah.
So you give up.
paying them.
Yeah.
So you give up. So I remember with our situation, it took around 5 months for the insurance to actually say that, okay, your claim is valid, we're going to be paying out. So now, had I given up after the second month and be like, I'm not going to pay it anymore because they're not actually coming through for me,
Yeah.
they can go back and say that, your policy
look
has
at
lapsed.
you haven't even paid
Yeah.
because you are basically rebelling
Yes.
in a way.
Yes. So what I would say is that with insurance, just make sure that you are paying them on a monthly basis. And what Refilwe did say, list everything that you want to be included in that policy. And then when you're having that conversation, ask them that, is this included? Is that included? Because now that will save you a lot of heartache. Because the thing about insurance is that the only time we see if it actually works for us is when you're in trouble.
When you're in trouble. And that's when, sometimes you can't even maneuver now because they'll tell you about these clauses, black and white, and it's a bit of a problem here. So would it help to have an insurance broker then?
Yes, 100%, because at least we can say that the insurance broker will have our best interest at heart.
Yeah.
Because most of the time, I'm sure anybody that has taken insurance over the phone, those guys go through it fast.
Yeah.
Those guys go through it fast.
T's and C's.
Refilwe, we don't have enough time. How do they work, these insurance brokers?
Yeah. I just want to pitch in there.
Sure.
Remember, an insurance broker is someone that's going to understand the terms and conditions, the entire jargon.
Yeah.
You might not even understand the whole jargon. Because just like accounting, just like geography, just like physics, even insurance has its own jargon. So that broker is someone that understands it and can break down a sentence that you thought you understood. They can break it down to you, then the meaning might be very different from what you thought.
And you pay them from
why
your own pocket.
Yeah.
Refilwe, you pay them from your own pocket.
You don't pay. No, you don't.
How
You
does
don't
it
pay
work?
your insurance. You don't pay your advisor from your own pocket. In fact, the company that they represent or the brokerage they represent pays them when you pay the company.
And then they...
So when you pay the premium, your broker then gets.
So they're on
his,
standby,
share.
basically, for anything that may happen.
Yes.
Awesome.
You understand?
Refilwe,
So, yeah.
yeah, no, man. I'm sorry to cut you there. I'm looking at the time, but I really appreciate you coming through, Refilwe. I'm hoping that people would, more or less take some of these issues into consideration and start getting their houses in order because you wouldn't want to find yourself in a receiving end. There is greater benefit to getting these insurances, even though, some of us can't afford them, Refilwe.
Yeah, there are greater benefits, and of course, we can't all afford them. And of course, the extent to which we need them will differ from person to person. It depends on how many things I need to insure. It depends on how many assets you have that need to be insured against those that don't need to be insured. So we have to look at the things that can be beneficial to us, the type of benefits in the insurance clause, the terms and conditions that we will be able to benefit. There's no use paying for something you can never use.
Yeah.
Yeah, read the fine details. Read. Pass it on to someone like Wusi's Pet, to go through that contract.
Yeah.
That would help understand and just root out some of these hidden issues that may leave you frustrated. Refilwe, it's always lovely chatting to you, man, learning from you and just connecting with you on some of these issues. I'm hoping that really as we go into the year, we tend to get our finances in order and then we do reach out to people like you that can help us as well in terms of really more or less getting the best out of these issues, these spaces, but most importantly, our finances. How do we connect people with you in terms of the work that you do?
Oh, well, guys, first let me say it's always amazing to be on the show. Truly, a pleasure to be here, and thanks for having me. You guys can connect with me on my Facebook, Refile Manyama, also on Instagram, it's Refile Manyama, and Twitter. I'll try and be more social media available this year. I'm really, or maybe I should just get a team behind it. And I hope I get to see everybody on the Known Wealth workshop.
Yes.
It is coming on the 3rd of May at 10 a.m. in Midrand. I hope I get to see a larger crowd than last time there. Of course, it grows every time, but it's always amazing to be in that space.
Yeah.
So I'm looking forward to seeing that and coming back to the show again, guys.
Awesome. Refile, thank you very much, man, for giving us your time.
All right. Thank you, guys.
Showman Refile Manyama coming through there as a senior financial advisor. I have to wrap it up. We're out of time. Guys, thank you very much for coming into the studio. Do you advise people to take home insurance when you're selling these properties?
Yeah, 100%. Because if anything does happen to you, say for instance, let's say nothing happens from a perspective of something happened to the property. What if something happens to you, you pass on, and then no one is there left to service the property in terms of the bond? At least, with home insurance, if that is also one of the things that if you do pass on, they'll pay off your bond, then you know that you are also safe, and then you can the next person can actually inherit your property. So I would say 100%, please do take your home insurance.
Guys, thank you very much for coming into the studio. And yeah, maybe before we let you go, how do people contact you guys?
On Instagram, YouTube, TikTok, LinkedIn, what's that? All of them.
YouTube.
All of them. At Known Wealth, all of them.
Really appreciate it. Nong Brothers, Oleboheng and Neo Nong, they're property investors and founders of Known Wealth. And joining us on that conversation around property and protecting your property. This would have been Senior Financial Advisor, Refile Manyama. A big thank you to everybody that formed part of the show. Let's do it again, God willing, tomorrow for the Friday installment of the Power Zone. The week is gone.
You've been listening to a Power 98.7 podcast. For more podcasts, visit power987.co.za or subscribe wherever you get your podcasts.